Hello, my dear students. A very warm welcome to all of you in Sri Jayendra Rank Zone. I am your friend and mentor for the subject Principles and Practices of Accounting. In this lecture, we'll continue with Chapter 2, that is Accounting Process, and we'll continue with Unit 2, Unit 5, that is Cash Book. All the concepts will be covered in the coming series of lectures. So, let's begin. Okay, this is lecture number 9 and we'll continue with petty cash book. We need to understand over here petty cash book and meaning of imprest system. Students, what happens that generally cashier carries the cash, and what happens, we have day to day small expenses, for example stationery, refreshments, postage, telegram, etc., sundries, etc. So generally what happens, it is very difficult to account for and to pay for each and every expenses every time. So what cashier do is, in the beginning of the month, they transfer a particular amount on the basis of past trends in the cash book, in the petty cash book. So basically what they do, from the cash book, they transfer, they make payment in the petty cash book. This petty cash book, there is a receipt. Supposingly they transfer 2000 rupees from cash book. So in petty cash book, this 2000 will act as a receipt. And for the month, whatever expenditure we need to make, small expenditure, say for example 100 rupees for stationery, 50 rupees for refreshment, 50 rupees for postage, 100 rupees for telegram, and so on. All the expenses will be done from the petty cash book. So cashier feel relaxed and we don't need to put a lot of stress on cash book in these kind of cases. Let us see the meaning first. So petty cash book is used to maintain the records of all small petty cash expenses, that is expenses of small amount, say 100 rupees, like auto fare, postage, stamp purchases, small repairs. Petty cash balance assets for the business are shown directly on the asset side of the balance sheet under cash balance column. Let's try and understand why we require the petty cash book and advantages of petty cash book. Saving of time of the chief cashier. Saving of labor in writing up cash book and posting into ledger account, because these are very small amounts. So we should not disturb cash book again and again for this purpose. Effective control over small payments. Let's see the format of analytical petty cash book. We have receipt. Supposingly we received 2000. There is a receipt of 2000 dated January 1, 2020. Now voucher number, will write on particulars cash received. We'll put the total over here. And from the very next month, from the very next day, we need to what? We need to write expenses. Expenses 1, expenses 2, expenses 3. And this is extras, that is sundries. I believe you understood till here. Let's see the note. Generally, a sundries column is provided on the right hand side, which is analyzed at the end of the month or week, as the case may be. You understood the meaning of petty cash book. Now try and understand the meaning of imprest system. They can ask you the meaning of imprest system in MCQ. Imprest system. The petty cashier is entrusted with a certain amount of cash, say 500, to pay petty cash expenses during the period, say a week. After that week, the petty cashier submits a statement of expenses paid by him. Example, 430, which may be reimbursed by him to the main cashier. Thus, the petty cashier will have 500 again with him, 70 petty cash in hand, and 430, that is the reimbursement received to meet the expenses during the next week. The reimbursement is called impressed system. I believe you must have understood this. I'll make it a bit simple for you. So generally what happens, this is the main cashier. He had given rupee 500 to petty cashier for a month. So petty cashier received 500. Now from this 500, for the same month, he did expenditure of 430. He made expenses and 70 rupees is left. He will submit a statement showing the expenses to main cashier. The main cashier will again give him 430 and reinstate the figure to 500. I believe you understood. I believe I'm making sense to you. Let us continue and see sale through credit oblique debit cards. Sale through credit oblique debit cards. Let us see the card contents. So we have credit card and debit card issued by bank in small plastic and containing, I think all of you must be knowing about it. Name on the card holder, say Ram. Card number, it's a 16-digit number. Date of issue, we have expiry date and a black magnetic strip. Black colored magnetic strip. Magnetic strip. Okay. Debit card versus credit card. What is a credit card? In a credit card, the card holder can buy now and pay later. This facility is there. You can buy now and pay later the payment after a certain period of time. Generally, it is 30 days. Whereas in a debit card, you should have money to buy right now. The card holder has to pay earlier in order to buy now. So in a debit card, the card holder should have minimum balance in his account. Nowadays, ATM cards issued by bank can also be used as debit cards. Let's see the parties involved in this. We have a card holder who buys goods using either debit or credit card. We have a card holder. The merchant who makes sales, that means who sells the goods to customer using either credit or debit card. Bank, the bank is the one who issues the debit card. Example, Standard Chartered Bank, ICICI, SBI, State Bank of India, Canara Bank, etc. Acquiring bank, a bank with whom the merchant has an account, example HSBC. And member service provider, the service provider could be Visa card or MasterCard. Visa card, MasterCard, we have RuPay card, etc. These are the service providers of the cards. Is it clear to all? Okay. Point number 4. We'll see point number 4. Accounting entries in the books of merchants. Merchant is the one who is making sales. What entry he will record? For recording sales, he will debit the bank account. So bank account debits, say 10,000 to sales account, 10,000. For recording commission charged on charged by the bank. So bank will charge commission. So because he has made the sales, he is paying for commission. So commission account debit, say 1000, sales 1000. Bank has to pay the money to the merchant. Commission charged by the bank is an expense, obviously, and hence the bank becomes the debtor. Sales is the business and it is payable to the bank. Do it very minutely. Commission charged by the bank is an expense and money received is an income in bank, obviously. Let's see this illustration. Enter the following transaction in simple cash book. Enter the following transaction in simple cash book. January 1, 2009. The whole month expenses are given. Cash in hand, the opening balance we have 1200. Received from Ram 300. Rent paid 30. Sold goods for cash is 300. This is receipt. Paid to Shyam the payment. Furniture purchased and obviously must be paid. Paid salaries. Rent due not yet paid for January. Okay, so it is due but not yet paid for January. We need to make cash book. Let's make cash book here. Date, particulars, that is receipts, amount, date, particulars, that is payments, and amount. January 1 we have opening balance, so to balance brought down. What is the opening balance? 1200. Let's see January 5 received from Ram 300. January 5 received from Ram to Ram account 300. This is done, this is done. January 7 paid rent 30. Paid rent 30 in the payments. January 7 by rent account 30. January 8 sold goods for cash 300. January 8 sold goods for cash, so to sales account and the amount would be 300. I hope you are clear till here. Let's move ahead. January 10 paid to Shyam 700. On the payment side we will write January 10 paid to Shyam, so by Shyam account and the amount is 700. January 27 purchased furniture 200. Purchased furniture 200, obviously it is an payment. January 27 buy furniture account 200. January 31 paid salary is 100. January 31, paid salary. We'll write by salaries. By salaries 100. Let's make a quick total. 1200, 1500 plus 3, 1800. Over here just write 1800. Deduct all these figures, 700 to 900, 1000, 1030. 1800 minus 1030 equal to, do it on calculator quickly, 770. 770, this would be the closing balance. We will write what? By balance carried down. This 770, that is 770, will be taken here on February 1 as opening figure. To balance brought down the very next month. In the very next month. I believe it is clear. It must be clear till here. Okay. Students, we are shifting on MCQs now. We are shifting on MCQs. Let's continue with the MCQ. The total of discount column on the debit side of the cash book recording cash discount deducted by customers when paying their accounts is posted to A. Credit of discount allowed account, B. Debit of discount allowed account, credit of discount received account. You should understand, students, debit side of the cash book. Debit side of the cash book, what we show? We show discount allowed. Discount allowed is an expense. Debit all expenses and losses. I know you can remember this rule for nominal account. Because of this rule over here, the answer would be B. Let's try question number 2. Cash book is a type of dash but treated as a dash of accounts. Cash book is a type of dash but treated as a dash of accounts. So cash book is a type of subsidiary book treated as a principal book. Cash book is a principal book treated as subsidiary book. Is a subsidiary book treated as subsidiary book. All of you know that cash book is a subsidiary book and it is treated as a principal book. Okay, let's continue. Which of the following is not a column in 3-column cash book? Cash column, yes, it is there. Bank column, yes, it is there. Petty cash column, there is no column known as petty cash column. So the answer is C. The answer is C. There is no column as petty cash column. Let's see question number 4. Contra entries are passed only when double column cash book is prepared, 3-column cash book is prepared, and simple cash book is prepared. Students, you should understand one thing over here. Answer can't be C because there is no bank account. Here only cash account is there. Double column cash book is prepared. Now double column cash book could have cash column as well as discount column, cash column as well as bank column. So the answer is B, 3-column cash book, that is cash, bank and discount column. So only when cash, bank and discount column would be there. The answer is B. Let's see the fifth one now. Fifth one, cash book records A, all cash receipts, all cash payments, all cash receipts and payments. Obviously, cash book records all cash receipts and payments. 6. The balance in the petty cash book is dash, is an expense, is an profit, is an asset. It can't be a profit because the balance has transferred from cash book to petty cash book. So it is an internal transfer. That means there is no chance of having profit. It is not an expense. It is an asset. It is an asset. It is an current asset, to be specific. Question 7. If Ram has sold goods for cash, the entry will be recorded A, in the cash book, in the sales book, in journal. There would be no entry in the sales book because in sales book only credit transactions are entered. No entry in the journal. So the answer is A, that is in the sales book. I believe it is clear to all of you. Let's see this theoretical question. It talks about, is cash book a subsidiary book or a principal book? Explain. Take notings along with me. A cash book serves the purpose as cash account and bank account. As well, which is a part of ledger. So no separate cash account is prepared. Thus, cash book is a part of ledger as well. A ledger is a principal book. Of accounts, and therefore a cash book is both a subsidiary book and a principal book. Okay, let's see another question. What are the various kinds of cash book? What are the various kinds of cash book? We have single column cash book, which is also known as simple cash book. We have double column cash book with cash column and bank column, and with cash column and discount column. Okay, at last you can write triple column cash book. In addition to the main cash book, firms also generally maintain a petty cash book, but that is purely a subsidiary book. Is it fine now? We are moving ahead to question number 3, and that talks about what are the advantages of a 3-column cash book. Just write the cash account and the bank account and the bank account is prepared simultaneously in the cash book in the triple column cash book. Therefore, double entry is completed in the cash book itself. Thus, the contra entries can be easily cross-checked in cash column in one side and bank column in the other side of the cash book. Also, the chances of errors are reduced. Is it clear? Next, you can write the information regarding cash in hand and the bank balance can be obtained very easily and quickly, as there is no need to compare. There is no need to prepare ledger of the bank account. Okay, I believe you understood till here. Let's continue. Let's see this practical question now. It talks about Shri Ramaswamy maintains a columnar petty cash book on an impressed system. Students, I believe you understand the meaning of impressed system now. The impressed amount is 500. That means the cashier has given 500 in the beginning of the month or the beginning of the period to the petty cashier. Show how this petty cash book would appear for the week ended 12th September 2015. Okay, I understood. So the impressed amount is 500. Total the amount should be 500. 7th September 2015, the balance was 134.90. Received cash reimbursement 365,510. So if you can total both of the amount, you will get 500. You purchased stationery for 49.80. Then on 8th October 2015, miscellaneous expenses is 20.90. On 9/9/2015, repairs expenses is 156.70. 10th of September 2015, the traveling expenses is 68. 11th of September 2015, stationery expenses is 71. 12th of September 2015, the miscellaneous expenses is 6.3 and repairs is 48.3. I believe it is clear. The question is clear. Let us try to solve it now. Solution. We need to make petty cash book. Petty cash book. Expenses, we have stationery. Then we have miscellaneous expenses. We have repairs. We have traveling. Stationery is fine. Miscellaneous, repair. Okay. These stationery, miscellaneous, repairs and traveling. First column is date. Second column is receipt. Third column is amount. Fourth column is again date. Then you have payments. Total payment and bifurcation of the payment. So we have stationery. Then we have miscellaneous expenses, repairs and traveling. We'll put traveling first. Traveling. Miscellaneous expenses. And at last, repairs. In the month of September, the date was 7 September. To balance brought down. What was the balance? The balance was 134.90. 134.90. Then he got reimbursement, received cash reimbursement to make up the impressed. What is the impressed amount? 500. So 365.10. 365.10. We'll write to reimbursement. To reimbursement. Now the expenses part. On 7th of September 2015, there is the expenses of stationery 49.80. Date is September 7. By stationery 49.80, and we will write 49.80 in stationery, rest 3 dash. On 8th of September 2015, miscellaneous expenses 20.90. 8th September, miscellaneous expenses. By miscellaneous expenses 20.90. In miscellaneous we had written 20.90. On 9th September, repairs 156.70. Repairs 156.70. Put it in repair 156.70. 10th of September, the traveling is 68.50. 10th of September, traveling 68.50. Put it in traveling 68.50, and rest of that columns is dash. 11th of September, stationery 71.40. 11th of September, stationery 71.40. The first is stationery, so 71.40, and rest of the three will be dash. I hope it is clear till here. On 12th of September, we have miscellaneous expenses 6.30. 12th of September, we have miscellaneous expenses 6.30. We have written like that. Same 12th of September, we have repairs 48.3. Same 12th, we have repairs 48.3. 48.3. Okay. So this is like that. Now what we will do is we'll total this total all the columns. Let's start with your calculators and total. Start totaling this. This total is 500. This total is 500 over here. 49.80 plus 20.90 plus 156.70 plus 68.50 plus 71.40 plus 6.30 plus 48.30, and the total is 421.90. Let's make a total of this also. Stationery 49.80 plus 71.40. The total is 121.20. Over here it is 68.50. Over here it is 20.9 plus 6.30. 27.2. And in repairs it is 156.70 plus 48.3. The total would be 205. The total expense is 421.90 students. You should understand that we have a balance carried down over here. The total is 500. What is the balance? 500 minus 421.90. The balance for the month is 78.10 over here, and this 500 will be the opening figure of the next month, the next week. So this is 12th. So over here this balance carried down will be from here to here shifted 78.10. So after 12 it is 13 September. To balance brought down. Just note it down along with me quickly. Just note down. Students, let's see what we have covered in this. Just see it from ICI Study Mat. This is Unit 5 Cash Book. So we have covered simple cash book, 2-column cash book, 3-column cash book, and we have also learned that it is subsidiary book as well as principal book. Kinds of cash book we had already seen in detail. This is a format of simple column cash book, double column cash book, and triple column cash book. We had done an illustration related to it also. We had also learned how to do the postings of cash book entries. We have learned about the postings of cash book entries. We had also learned about the petty cash book, and we had also learned about the impressed system that is a part of petty cash book. Impressed system, that means what? That there is a main cashier and there is a petty cash book cashier. So the main cashier transfers an amount to the petty cashier, and at the end of the month the petty cashier submits the bill to the submits a statement to the main cashier, and main cashier again reinstate or reimburse to the petty cashier. Impressed system of petty cash book. Advantages of petty cash book we had already seen. Entries for sale through credit or debit cards, we had already seen these concepts, debit cards and credit cards. This is a triple column cash book with discount, cash and bank, and we had also covered MCQs, theoretical questions and practical questions. So we wind up this class over here. Thank you all of you.